A billion users by 2025's end and 4 billion by 2030's end are the results of simple extrapolation from that graph? Sure, that's a good chunk of the globe. Sure, could you tell me what that means? As an alternative, you can use Bitcoin's log chart to predict its future value and see its exponential development rate. Now we're talking about $1 million. As for the space, it goes from 2.5 trillion right now to 10 to 15 trillion at the end of this cycle, depending on the cycle, and then it goes on to 100 trillion, which is the size of most other asset classes like stocks. In the next 6 years, Powell predicts that the market cap for all cryptocurrencies will reach $100 trillion, with the world's largest cryptocurrency reaching a price of $1 million per coin. Even though it's still in its infancy, the Bitcoin business has already become a social outcast and an unstoppable force. Cryptocurrency investors can celebrate gains of 10 to 20% per year, while bond and stock investors can only do it in a matter of minutes. There will be more evidence of crypto's dominance in the coming years, according to Powell, who believes he has been the race's fastest horse. It's a statement from the CEO of Real Vision. This is growing at twice the speed of adoption of the internet. It appears like this when looking at the big picture. The crypto market cap will rise from $2.5 trillion to $100 trillion over time, according to my prediction, because of this adoption curve. In a recent interview with Squiggle DAO, Powell discusses these extremely optimistic predictions and more. Determine your time horizon first. Everything else is secondary to this. I can see that most people are already terrified about the next down cycle due to their post-traumatic stress disorder PTSD from the last one. However, if you wish to see the pioneers of this field, men like Dan Moorhead and Wences Cassera, none of them cared. They simply rode the ups and downs and accumulated their money to an enormous amount. Many private individuals have also done this. However, the prospect of the potential drawbacks is more terrifying than the opportunity itself. Despite the fact that it is never pleasant, I was looking forward to it in 2022 since it meant I could advance in my current positions and even add compounds. Thus, you surpass all others who have done nothing and return to an all-time high significantly faster. I find that to be quite intriguing. Time horizon is so crucial. If you're emotionally or psychologically incapable of handling the negative aspects, then you simply do not want to. Okay, I agree that you need to give that some serious consideration. When the market is doing well or bad, people tend to go completely bonkers. If the market takes a nosedive, they will likely sell all of their tokens and swear off cryptocurrencies forever. They make the mistake of purchasing an excessive amount of foolish stuff during a bull market. Owning top-notch assets and doing nothing will ensure a smooth transition from 2.5 trillion to 10 trillion to 100 trillion. Now, we all harbor some degeneracy within. Giving yourself some room to accomplish that is important. You name it. I have a position in dog, whiff, hat, bonk, and everything in between. I estimate that it's less than 1% when I review my portfolio in hindsight. As crazy as it seems, I can't help but stare at the screen all day, checking the ticket price. Only 1% because the other 99% is a simple buy and hold strategy. Also, I see a plethora of people pretending to be too adorable by announcing that they will own an undervalued cryptocurrency such as Cardano or XRP. Fine, however, there is a chance that their value will be lower than that of the proved assets. These tried and true assets are still popular. From 2015 to now, Bitcoin's value has increased by 1,500%, around 160%, 70%, or a similar amount on an annualist basis. Yearly, yes. Solanas are making a comeback. Then Solana goes up to about 200. That picture was taken back in February. Still, many of these aren't particularly high. Simply having the top assets yields such tremendous returns. Having said that, I am cognizant of the fact that many people may only have $10,000 in savings. Well, you know they reason. This is still a 14x. Even if Bitcoin reaches 1 million, it follows that I have 1,400,000. Would that even be enough to get a home deposit? Is that money set up for old age? Okay, I see. As a result, individuals would like to take more calculated risks. Now you know how to do this correctly. For the simple reason that the NFT cycle bankrupted a large number of people who had lost $10,000 by repeatedly doing this during each crypto cycle. The sheer volume of extremely preliminary speculation also led to the demise of many individuals. No one is better than anyone else since we all have shameful spending habits. Everyone possesses shameful wallets, and unlike the other one, you shouldn't employ leverage. People also appreciate getting a yield, so that's another common behavior. It seems pointless to me, therefore there are dangers associated with yields. They are not without danger. Staking yields, but it usually means you've locked it up if you aren't liquid staking. There is a chance that Lido or someone else's platform will collapse if liquid staking is involved. Isn't something transpiring? Quite a surprise. As for crypto, the unexpected is a constant companion. Leverage on an asset class with a volatility of 70% is extremely risky. The likelihood of you losing control of your coins is high. The only thing you need to do is keep your coins under control. Storage is crucial for that reason. Hold on to your coins, it is your only task. Your future self will be eternally grateful that you held on to it for that 5 or 10-year bet. If you wish to capitalize on the opportunities presented by the cryptocurrency market, Pal recommends taking it slow, not using leverage, and making sure that your portfolio is heavily weighted in big cryptocurrencies such as Bitcoin, Ethereum, and Solana rather than in degen bags. Pal stresses the importance of not employing leverage. According to Pal, every facet of the financial industry will be transformed by a complete technology revolution that the globe is about to experience. Therefore, he warns that these tremendous chances may only last for another 6 years before the world as we know it will change drastically. You can find further video clips here. That year at $200, I purchased Bitcoin. It peaked at $1,000 and then dropped 87%. However, my time horizon was quite long. It's a choice, so I'm cool with it. I didn't stake a lot, but it was respectable. After that, I stepped away from it for a bit. I kept up with it, but I thought the bet would continue indefinitely, so I didn't stress out about the P&L. That is a choice. In 2017, when things were beginning to heat up, I made the mistake of selling out. $2,500 was the amount I was ahead by 10 or 12 times. They are well versed in the current situation since they were involved in the Bitcoin forking conflicts. On top of that, I was hoping it would be incredibly clever. Therefore, I cashed out. I figured, okay, I'm obviously George Soros, I just built something absolutely fantastic. For the subsequent 6 months, it increased by a factor of 10. People just can't seem to get past 2017. The last cycle left them with lasting scars. Whatever occurred at the end of that cycle in 2017 was absolutely insane. So it jumped from 2,000 to 20,000, and then dropped another 85%. Not until the sell-off following COVID did I get back into it, I signaling with that. So I went back in, performed admirably in trading, got the 50% off, end of story. I have been in it continuously since then, and everything else in it is locked and loaded. I got a lot bigger position this time around. I regret doing this and should never have returned. After giving it some thought, I returned to the previous position and pondered the possibility of doing nothing more than 5 times better. Next, I considered the consequences of following the rules, which would have required me to say double the initial wager, not an impossible feat, but nonetheless substantial. That should be doubled. To get within 40% of the low, simply add that same amount. So you're leaving yourself a lot of leeway. I'm not predicting that you'll hit rock bottom, but you do have 40% wiggle room to find a way to avoid it. Taking a dollar cost average approach during a bear market would have yielded 25 times greater results due to compounding. I learned a hard lesson from that. Currently, my working theory is based on the charts of cryptocurrency acceptance that I have previously posted. Thus, we employ active wallets. We now know that they're being counted twice. Nonetheless, we're making comparisons to the internet-i.e IP addresses, which are also subject to double counting. Then it must be okay. No, you can use it as a general guide. There are currently between 500 and 200 million wallets in use. Its expansion rate is double that of the internet. This asset class or technology has thus far experienced the world's quickest adoption rate. The technological aspect has been